Hi guys, we'll be starting the session in next 1 minute. We can see some participants are still joining in, so we'll wait for them to join in. Good evening, everyone. Welcome to today's session of After Hours with William O'Neill India. I now hope everyone's doing well. So before we start kick off the session, I'll just like to give a small disclaimer that any security that we discuss today, whether should not be considered as a buy or sell recommendation, and we're just discussing it for educational purpose. So let's start with Nifty 50 chart analysis for the week. I mean, we'll give you the chart analysis for the day as well, but let's talk about the week first, as it's a Friday. So during the entire week, we had four down days. So Monday, Tuesday, Wednesday, and Thursday, Nifty was on a continuous losing streak as it continues to lose on the 4 days, 4 consecutive days between Monday to Thursday. And during this phase, Nifty even breached its 50 DMA as well, and having a short-term moving average that is your 10 EMA as well. Talking about today's action, today Nifty had a very positive opening. Post that gap up opening, Nifty was trading near its lows for brief part of the day, and during the latter half of the day, or even we can say in the last 1 hour of the trading session, Nifty found support, and Nifty was able to reclaim its 50 DMA and also the 16,000 level as well. So 50 DMA was around 16,027, and Nifty closed around 16,049. So reclaim of 50 DMA can be taken as a huge positive, and even Nifty managing to close above the 16,000 level. On the volume front, volumes was around 208 million, which is less than yesterday's volume, but higher than your 3-month average volume. So can be considered as a good sign for Nifty. Talking about the top gainers and losers, your top gainers came from your FMCG sector and your auto sector. So the Tata Consumers and your Hindustan Lever gain around 3.3% and 2.9% for the day. Tata Motors and your Maruti gain around 2.5% and 2.4%. Titan and your LT gain by around 2.9% and 2.4%. On the losing front, metals were the major losers as Tata Steel lost around 2.6% and JSW Steel by around 1.3%. Power Grid was down by 2.63%, HCL Tech by 2.3%. On the sector view as well, we can see that auto was the biggest gainer. Auto and FMCG were the biggest gainer as they gained around 2% and 1.5% for the day. On the opposite front, we can see Nifty Metals was the top loser as it lost around 0.8% for the day, and PSU Bank around 0.43%. So Nifty still remains in a rally attempt, but today's action was a huge good positive as Nifty was managed to able to close above its 50 DMA, which is a good support line. But we're still not able to stage a follow through day to take the markets to confirmed uptrend. So I mean the importance of follow through day we have gone about it for hours and hours in our previous session as well, and even on the learning articles and the special sessions as well. So till we get a follow through day, we won't be able to gauge that the market is in confirmed uptrend, and that's why a follow through day becomes really important. So without a follow through day in our study at William O'Neill, not just in India market or the US market, across the global markets, no rally has started without a follow through day. So we need a follow through day to take the markets to confirm uptrend. So as the result season has started, so Federal Bank reported its Q1 FY23 results, and the profit was on a beat on the estimates. So talking about the results, NII or NII increased by 13.1% YOY to 1,604 crores. PAT increased by 63.5% YOY to 600.6 crores. Your GNPA ratio improved by 11 BPS to 2.69%. NNPA ratio improved by 2 BPS to 0.94%. However, slippages increased to 463 crores from 399.4 crores in previous quarter, mainly on account of retail accounts. Um, your loan growth stood at 16% YOY, and the ROI and ROE for the bank was at the best in the last 25 quarters at 1.1% and 12.7% respectively. On the technical front as well, this stock is forming a double bottom base and just 8.36% of highs. And if we talk about just today's action, you can see that markets reacted positively to the results as it was a beat on the estimates, and not just that, it climbed around 1.8, 1.9% on really heavy volumes, so which can be considered as a good sign. So the other big bank, your largest private sector bank or one of the largest private sector bank in India, SDFC Bank, is expected to announce its Q1 FY23 results tomorrow. So, and the expectation is that HDFC Bank to post a 15.1% rise in NII to nearly 19,600 crores, and PAT to grow by 21.7% YOY. NIM is likely to remain stable or to improve quarter on quarter for this quarter. Operating profit is expected to rise by 11% YOY or 1% QOQ. Asset quality is likely to remain stable. So even on this front, markets are expecting kind of good results or a beat on the estimates. That's why you can see HDFC Bank was little up on nearly above average volume. So let's see how we can see a beat on the estimates or now or not in tomorrow's result, and how does the stock or the market reacts to it in the Monday session. So talking about rupee touched in taking yesterday's and today's action into consideration. The rupee touched an intraday low of 18.2. As we know that India merchandise trade deficit widened to 26.18 billion in June. So surge in deficit was driven by surge in petroleum products, as the petroleum prices had in the last quarter touched a high of around 120. Crude oil had touched a high of nearly $120 per barrel, and your petroleum products import had surged by 119% to $8.65 billion. The next two that were responsible for the surge in your trade deficit was gems and jewelry by 25% and electronic goods by 61%. Widening of your current account deficit and your inflationary concerns has led to the depreciation of Indian rupee. So talking about the global macro data that is expected today, it's from the USD, which can be considered important, is your retail sales month-on-month data and the core retail sales month-on-month data. Talking about the core retail sales, the previous month, this one expansion of 0.5%, and the consensus estimator is of 0.7% for the month. So our chart of the day or the stock of the day is your LT Foods, which is Daawat. And before going ahead with this stock, would like to give a disclaimer that it's not a buy or sell recommendation, and it should only be considered for educational purpose. So LT Food owns several rice brands such as your Daawat, Royal, Heritage, 817 Elephant, and many others. It's a flagship brand of Daawat and Royal, as they enjoy leadership position both in India and US. Daawat enjoy in the basmati space a leadership position in India with a market share of nearly 27%, and in US the Royal brand has a market share of around 50%. So the company's biggest market is the US, which accounts to 37% of the total revenue, followed by India at 35% and Europe at 14%. So after a moderate quarter of Q4 FY22, the company is targeting 5-year revenue CAGR of 10 to 12%, supported by continuous expansion of product portfolio and strengthening of distribution network. So the major positives in the last quarter and this quarter and the future will be the reopening of hotels, restaurants, and catering, which is aiding to the top line growth as well. If we talk about just the basmati prices or the realizations for the company, basmati rice prices has increased by nearly 32% on a YOY basis, which is expected to aid companies' realizations in export as well as in the domestic market. So going forward, company also targets 150 BPS or 1.5% expansion in your EBITDA margin. In FY22, the EBITDA margin is around 10.8%. So the company is expecting to take that over 12% in the near future through improvement in product mix and operational efficiency. So on the fundamental front, it's a really good story with commodity prices, your basmati prices going higher. So talking about which is reflected in your EPS strength as well. So the EPS strength is really great at 90. The buyer demand is also good at B plus. If you see as the number of funds and the share held by funds, the number of funds has increased by nearly 30%, and the share held by fund has increased by 4.6% quarter on quarter, which is a really good sign that it is getting institutional support as well. Talking about the price strength for the company is fair at 67, but as you can see the RS line, let me do an annotation for you guys on this part. So on the right hand side of the double bottom formation, you can see the RS line is trending higher. And when during the down days or the down formation of the double bottom, you can see volumes were drying up. So as volumes were drying up, it was a good sign. But even on the accumulation phase, there was little less volumes. Volumes started creeping in the last few sessions. So the stock is still 4% to pivot and around 14.5% off high. So the stock still has some work to do, but if the stock is able to, and the result is nearly 2 weeks down the line. So if the stock is able to show some momentum in this phase and is able to show good accumulation in this right hand side of this base on a above average volume and is able to break out and the market comes into an confirmed uptrend, then it can be a good stock to watch out for. So thank you guys, and enjoy the weekend and stay tuned with us for both the shows, the pre-bell with William O'Neill India and After Hours, one in the morning at 8:45 a.m. and After Hours at 4:30 p.m. Thank you very much.